CashCalc will calculate any CGT liability, if applicable, on the disposal of various assets. So let's take a look and see how this works. If we click on Inputs and Timeline, click on Savings and Investments, and let's add a savings and investment pot for Keith. We're going to call this his investment account. The category is obviously quite important because if we select ISA, there won't be any CGT to pay, but a lot of these other ones will, such as GIA and unwrapped investment. So if we make this a GIA, the owner of the GIA is Keith. The original investment, i.e. how much Keith has invested to date, 50,000. We know the starting value, as in today, is about 120,000, so it's been quite a significant gain. And then the total return, what's the capital growth of this investment solution? What are we expecting? Perhaps 5%. And you can, if you want to, we won't do it for this example, but you can also include income. Is there any interest income expected and or dividend income as well? And you can set an amount or a percentage for that too. In this case, we're just going to save this as a capital growth GIA running at 5%. And if we come to our cash flow modeler, on the left-hand side, you can see the GIA has been included. Every single year it grows by that 5% minus inflation, and the client hasn't had to touch it until the end. So clearly there won't be any CGT to pay because he's not selling any of that asset. Now let's force a withdrawal. So if we click on the Inputs and Timeline, if we click on Withdrawals, we're going to add a new withdrawal here. And we're just going to withdraw from the new investment account we've just set up. We're going to call this holidays because he's going to withdraw maybe £10,000 every year to pay for some nice holidays over the coming years. And we're going to call this holidays and put £10,000 every single year from today up until the end of the forecast when they hit 100. Now, obviously, escalation rate, you can change that as well. We're just going to stick that to 2.5%. And if we click on Add Withdrawal at the very bottom, and we'll take a look at our cash flow model again, and that should have changed quite substantially. No longer is it lasting until 100. That gradually reduces in size, and if we click on the taxes tab, we should be able to see that CGT coming through. So the CGT every single year being calculated in blue, and if we click on money in, money out, we should be able to see that income coming in as well, the holiday income coming through by selling down the investment account. If we want to get into the weeds of the tax calculations, if you click on the yearly breakdown tab on the left hand side, we'll open up the most recent year. There we go, we've got the holiday income coming in. That's the selling again of the investment account. So you've got the £10,000 sale, the capital gains tax being paid is £680 for that year, and therefore the net amount Keith receives is 9320, and then the calculation underneath the annual exempt amount that Keith is available to utilise, and then he's higher rate this year, 24%, and therefore that's how we've got to the £680 calculation for this year, and then the subsequent years thereafter. So CashCalc can deal with all manner of different taxes, and that's how CashCalc can deal with CGT. Hope you found that useful. Any further questions, feel free to reach out to our help desk.